Welcome back to the Make It Count podcast.
I'm Marcus Mire, founder of Mire CPAs and the Total Control Accounting System.
I'm Tyler Warner, a small business owner with a lot of accounting questions.
All right, Tyler, today we're talking the second phase of the Total Control Accounting System, which is the read phase. So last week we did the
Record phase.
God, I know I'm getting confused all the alliteration here.
Look, man,
you try to make it easy
I know
on me.
this stuff now. I'm a Total Control Accounting fanboy.
Right. You're one of one, I think.
Yeah.
Besides my mom. But we've got, the record phase, cleanup, collaboration, consistency.
Right.
No, cleanup, consistency, collaboration.
Okay.
And now we're in the read phase, which is inform, integrate, and improve.
That's right.
So we like those, I would say alliteration, but we like using the same letter.
Sure. Okay.
Helps. I thought it was going to help me remember.
Yeah,
but
exactly.
Apparently not. So let's talk about the inform stage. And really what I want to do today is I'll just kind of go on a little tangent here, and I'll let you jump in and stop me.
Go for it.
So inform. So let's kind of back up a little bit and say, so you're moving into this read phase, the inform stage of the read phase. You've just gotten your data's cleaned up. You're consistent with it, and you're collaborating with an advisor.
Right.
All right,
so means I'm keeping up with my transactions.
Yep.
Everything's reconciled. I'm organized in terms of my financial data, and I've recently met with a CPA.
Right.
Got a handle. I've kind of, we talked about last week, kind of predicting, what my tax liability might be.
Right.
And so I've got that sort of all those ducks in a row.
You got a foundation.
Right.
You got somebody that's now kind of looking over your shoulder. They're learning more about your business. So you're kind of in those infancy stages, but you got the foundation set. So in the inform stage, you're starting to take that data and read it. Hence the read stage. So you're starting to look at what's called key performance indicators or KPIs. You're starting to learn, and a lot of times it's going to sound different to a business owner than it does to an accountant, but business owners are good about having a good intuition about the things that make their business tick, the things that make their business go better. And so you're going to start to understand or articulate or define what things move the needle in my business. So you and I were talking earlier about a dental practice. We're going to start to talk about new patient visits or the percentage of those new patient visits that result in a crown or some kind of procedure versus a cleaning. Because you're starting to understand, okay, certain things take similar amounts of time or maybe slightly different, but they pay a lot more, the crown versus a cleaning example.
Right.
You're starting to understand, what drives the number of cleanings I get versus the number of crowns I get, or Invisalign. Let's just keep the example going. Then you're going to start to understand, okay, from that, what marketing am I doing? So you're starting to take your data and you're starting to let it predict things and let the data tell you something so you can make good decisions.
Yeah, so this moves beyond just okay, I'm tax compliant, I'm tax ready, to now I'm using accounting information to really make improvements ultimately on my business. And it starts with, I guess, information, right?
Yeah, those key performance indicators. And there really can be as simple as that. They can be financial, meaning we make a 10% gross profit. That would be a financial kind of indicator. Or it can be a non-financial piece of information. Like I told you, new patient visits, customer satisfaction scores. All of those things go into running your business. So there's certain things that are not even on your financial statements, but they can be derived when you have a solid financial footing, like we talked about, and then you start to add these things on. You start to tell somebody, maybe in the dental example, hey, track our new patient visits, track where they come from, what are the leads coming from, or what's our best referral source? Maybe there's another dentist in town who doesn't do this procedure, and he or she sends a lot of patients for this procedure. It's starting to get a grasp on what makes this thing hum so that you can dial it in. You can make the most bang for your buck for your efforts.
Right.
Yeah. I'm thinking of something as you're looking and nodding at me. I'm losing my train of thought. It was on the dental practice. We'll come back to it. So the next phase is the integrate phase. So this phase, you're taking the data you've learned in the inform phase, those KPIs you've now kind of fleshed out, starting to understand that they move the needle for your business or they don't, and you are then integrating them with your team. So you're bringing your team in and saying, okay, these are the things we want to track. And you're starting to get actionable plans from those. So now everybody on your team, and you know this, everybody business owner knows this. Once everybody gets on the same page, aligned with a goal and a vision, momentum happens. And I think you could say that in the integrate phase is really where some momentum starts to happen, because people now have a goal in mind. You might tell your sales team one thing, your operations team another thing. You're starting to give them targets to shoot for.
Gotcha. So a first step in the first phase would be to define these KPIs.
Right.
Okay, and I guess this is kind of like you said. Every business is going to intuitively know. I mean, half of it's probably jargon that they're already familiar with. But having the foundation of being able to track financial things is a good way to at least build on.
Yep.
And track those other things.
Yeah, I think a lot of business owners are kind of have this common sense savvy about them, and so they kind of already have these things. Mm-hmm. But it's good to put the dollars and cents to it, like your financial statements with it.
Right.
And you start to that's really when the good stuff happens. Because I know a lot of business owners that they're not Harvard trained business guys, but they really are savvy, and this is what they understand. They understand these nuances of, man, if I push this domino down, it works much better than this one.
Yeah, I would almost even think that most business owners are doing this before they've done the first phase.
Right.
Because this is almost required in some sense if you're going to grow, or you're trying to at least get your hunch on some of these things or your gut on some of these things while you're growing a business, way before you're even worried about, sort of having all those tax ducks in a row.
Right. And as we're talking, the one thing I wanted to say that I couldn't remember was a KPI could be simply, or in this informed phase, it could be simply having a service that you need to stop performing versus a service that you need to perform more of.
Right.
And when I say that is because a lot of times if your financial information isn't organized in such a way where those two things are not aggregated, they're blending, you'll never know. All you see is the bottom line, but in that scenario, you might have a division of your business that's, let's just say, make easy math, lost $100,000 last year, and one that made $200,000. Well, the net shows $100,000. I'm doing pretty good.
Right.
But what if you just got rid of the product line or the service line that lost $100,000 and doubled down on the one that made $200,000?
Yeah, exactly.
That's a very simple example of that informed stage of that's something that you would really want to know.
Yeah. Yeah, and it's like we even talked about with the exterminating example, how if you drill down to the specific employee and all of the, their truck, everything that goes with them compared to their billable time, you can really kind of start to get a sense of who's the most profitable on the field or whatever.
Yeah, and to that point, a savvy pest control owner is going to know a new guy really ought to hit 12 houses. Mm-hmm. He just kind of knows that from intuition, kind of to your point.
Yeah.
Maybe before he's got his data really organized, he knows, man, you should be hitting 12 in a day.
Yeah, I was trying to think of what the acronym of that would be. You know, pest control per.
Right.
I don't know.
Yeah.
I guarantee you they have one.
Yeah, that's right. That's right. And so in this integrate phase, you're really starting to give people metrics. So you've defined the metrics in the informed phase. Mm-hmm. Now you're giving these metrics to people so they can start with, depending upon how I'm saying teams, like sales team and operations team. Look, I'm a small business. I don't have a sales and an operations team, but you get my point.
Right.
There's certain people that have certain things that they should be focused on that maybe certain other people shouldn't. But now you're giving them those tools to define and narrow their focus.
Right. The actual SMART goals, right? The measurable.
Right.
So
what is SMART? You remember?
Oh man, let's see if I can
put you on the spot here.
Let's see, SMART. It's an acronym, so let's start there. I'm blanking on the S.
Is it systematic?
No.
I know it's measurable.
Actionable.
Actionable. Yep. Let's table that.
Ooh, yeah.
We'll come back to that next episode.
Yeah. Shame on me for bringing it up without.
I don't know it either. So just say it. All right. So inform, integrate, improve. Last phase of the read stage. I'm gonna call them
short.
Stages.
I think is S. Huh?
Is it short? I don't know.
No.
I don't think that's
all
right.
right. Well, let's move on.
I
don't want to keep doing that all podcast.
Right. That's really great podcast right there. Back and forth of
Tyler,
an acronym that
over
we don't
20
know.
minutes, Tyler remembers an acronym.
Right. All right, improve phase is exactly what it sounds like. So in the inform phase, you've defined the KPIs. In the integrate phase, you've started to integrate them, and everybody knows what their goals are. And now you're improved. You're just fine tuning. You're working toward them. You're using your data to make improvements. Maybe a goal you thought was attainable, or maybe a goal you thought would really move the needle doesn't. So we regroup, and I think that's you're defining and improving the goals with those specific teams and just fine tuning them.
Yeah. All right. So that's kind of an overview of the 3 phases of the read phase.
I know we keep saying can we say 3 phases of the read stage?
All right.
Just for both of us. I've been all over the place with this. I'm literally writing down stage.
You guys are hearing how the sausage is made.
Right.
All right. So phase in this stage.
Yeah, phase of the stage. That's right.
All right, I can get on board with that.
Yep.
I think so. So those are the 3 phases of the read stage.
Right.
Let's maybe kind of go back through them and figure out like what can be done. Like I'm thinking of questions like in the inform stage. Phase. In the inform phase, how often should you be looking at those things and what you should be looking at routinely? And then we can kind of move on to the integrate and maybe give some tips and things there too.
I would say no more than
in my mind, I guess I'm thinking there's some things you want to be looking at daily, weekly, and then monthly, maybe quarterly.
Yeah, I don't even think it's that much. I think you can zoom out. I don't think you want to get too big of a zoom because then you miss things. I say monthly. I mean, and look, there are probably some metrics. What's in your, like what cash do you have on hand? Yeah, got to look at that daily. Mm-hmm. But if we're starting to really define metrics to fine tune our business, those things don't have to be looked at daily. Those things can be looked at and probably best looked at monthly, so you can sit back, have some data, don't make rash decisions. That's another thing. If you're looking at this stuff all the time, it's kind of a forest for the trees issue. So I would say get some common sense KPIs that matter to your business, or work with an advisor to determine those and start to understand like, okay, these things really make our business go, and look at them monthly, maybe quarterly.
And one thing you've mentioned before too is comparing it to the year prior or maybe the few months before, and that way you have some context as to whether this is good or bad.
Yeah, good data and history are your friend in this, because you can't understand if things are out of whack if you don't have a historical perspective to draw upon.
Right.
Yeah.
Yeah, you don't know you shouldn't be freaking out if the summer's slow if you know that that's just how it is every summer.
Yeah, if you sell ski equipment. Right. I mean, it's like
that seemed like one of those obvious ones. I don't know if I needed Zero to tell me.
Right.
But to that end, maybe that's a segue into the integration phase.
Right.
How much of this can be, one of the things you talked a lot about in the first stage was getting it all into like one hub is a big part of that, right?
Yeah.
And you obviously recommend Zero because it can really do that.
Right.
How much can Zero handle in this integration phase?
A lot. But I would tell you the really nice thing about any cloud application, so any cloud accounting application, like which is what Zero is that if there's something that's really specific to your business, chances are there's a great app that plugs right in via an API integration. So if you're really like this heavy inventory business and you need a lot of analytics around inventory, great inventory tools. Yeah, Zero has an inventory, but it's not meant to do 10,000 items and items that are packaged where there's 3 or 4 things that go together. You know what I mean? Like raw materials. It's not meant for that. But there's a great application that'll do that for you. So yeah, I mean your accounting software and being organized is the jump off point to then say, Zero or QuickBooks Online, it does a great job, but man, we really want this level of specificity. And I would also add, if you're getting to the point where you say things like, we want a little more detail and specificity, then that's a good place to be. Because now you're out, again, shopping to fine-tune your business. You're starting to say, man, that inventory we're doing right now, it could be better. Let's go find a package that does that. So yeah, to your point, you go grab another app that'll plug right in and do more heavy lifting than your core package. But it starts with having that core.
Yeah. Okay. I like that. I mean, I can imagine, construction, everywhere from construction to anything with, like you said, a lot of inventory, or even like, I think of like IT where there's like just as much labor and product being delivered.
Yep.
And you could there's all kinds of things I'd imagine you'd want to track.
I think at this point, Xero connects to, I want to say it's right around 1,000 apps. So, I mean, think about it. If you go to their app marketplace, they have it, you can search it by topic or by type, I guess you would say. I mean, think about it. I mean, the possibilities are endless.
Right.
And there's somebody out there with a problem that other people have trying to solve it with an app.
Yeah. All right. So that would be a good place to start then, probably would be the marketplace. I guess so. If you're already kind of craving that information, you can kind of think like, man, it would be nice to know X, Y, and Z. And you've already built the discipline of being able to track the data to do something with it.
Right.
Then that cloud accounting really opens up, and specifically Xero, I should say, because
I mean that's what we use.
Marketplace.
But I mean, but QuickBooks Online's the same. I mean, if they're major players, most people want to integrate with those too, so they're going to have most of those options are going to play nicely with both.
Gotcha.
Yeah.
I'd imagine moving into this inform phase, we've kind of talked a little bit about gut instinct. There is kind of this tension, right, of like being over analytical. And I'm just thinking of like business meetings that I've been in, where there's like, there's people who are like, man, I live and die by the data. Like we don't really need to, worry about anything else.
Yeah. Take the emotion out of it.
Yeah. If I can make the data, present the case, then let's move forward. And there's some people it's like, man, they just kind of go with that gut.
Right.
What, this is moving away from accounting expertise and just kind of into small business. What can you speak to of like the role of that data? And how you've seen probably both, and what the advantages of either are.
I think I would say the best scenario is to have it. So let's start there. It's a nice fallback position to have the data.
Sure.
It's always great to say, we have it, but maybe we'll go with our gut. Okay, understand that.
Yeah.
I think it's a worse position to go.
That's probably a really fair argument.
Yeah.
Like, you shouldn't go with your gut if you haven't seen seen the data.
To the detriment of having data that you or not. Yeah, I mean, I think so. That's the first thing I would say is that, okay, I understand a little more of a gut feel kind of type leader, but man, the data just informs, and I think the data will start to make that gut reaction or that gut feeling better.
Yeah.
So you're going to have history and experience going with your gut. I'm using air quotes here.
Mm-hmm.
But a lot of times it's because you can look back at the data and say, yeah, that was a good decision.
Right.
But yeah, I mean, I think you can do a little bit of both. But man, I love the data as a fallback.
Yeah, I think that offers a lot of clarity. I mean, I would know I'd be a lot more excited about going with my gut or challenging maybe history if I at least knew confidently what it looked like.
Yeah, maybe your gut is, man, I really think this service is going to take off.
Mm-hmm.
And your data says, yeah, we think, we might do pretty well.
Right.
Okay, maybe now the floor is just doing pretty well.
Yeah.
But the ceiling, based on your intuition and what you know that the data just can't tell you, because maybe the data is the data is historically looking, right? It's not looking forward a lot of times, and we haven't even talked about that, plugins to do kind of projections. But so maybe you're using your intuition to say, no, I think it's going to be better than what the data says.
Sure. And to your point earlier, and I feel like, man, I probably didn't take this seriously enough in some of my business experience where, you mentioned earlier having an idea of like that example where like you might have been 200,000, but you had one service that was negative, one service that was positive, and netted 100. So you're like, okay, I'm still in business.
I'm still doing pretty well.
What I mean? One of the things where it's like, okay, you can have this gut or this maybe this sense where you're like, I want to go in this new direction.
Yep.
But without having good data and good metrics like this, you really don't know how long you can afford to do that. Right. You don't know how big of a risk you can take if you're not looking at the measurements and the information.
Absolutely.
So I would almost say that, it really gives you having that information not only just informs how well you're doing on the things you're deciding or the things you've already done, but it can kind of give you an idea of like what risk can we take, how innovative can we be, how innovative can we afford to be.
I'll give you a very simple, small example that affected our business. So we used to do probably more, it's been waning over the last 3 years. we used to do a lot of payroll tax returns. It's kind of a necessary evil. If you're working with a CPA and you have payroll, somebody's got to quarterly file the payroll tax returns, which is essentially a reconciliation. It's you telling the government, here's what we paid people, withheld from their paychecks and matched, in terms of tax, Social Security, Medicare tax, and here are the deposits we made for the quarter. It's a reconciliation most of the times because people pay their payroll tax ongoing. You don't owe any money.
Okay.
The client derives no value from it other than your accuracy. It's kind of like being a referee. They only know when you screw it up and you get a penalty and they go, hey, why don't you file my payroll tax returns right? Okay. You make no money on those as a CPA. Every CPA here, if they're listening, they know this. Because there's no value. If they try to bill by the hour, nobody likes it. So you then try to flat rate bill it. You just can't get the value because the client doesn't value it. We saw this a while back and said, let's get out of the payroll tax return business. There's a couple of clients we still do it for. My point is, we knew, why would we spend time that makes $0? It's basically capacity just thrown out the window. We said, you know what? Gusto, they do payroll great. And you know what they also do? They do the payroll tax returns. The selling point to our client was we went to them and said, listen, it's going to cost us money. I'm telling them this. I won't bill you for the payroll tax return. That's lost revenue for me. But I knew behind the scenes I was going to go replace that revenue that made me no net profit with revenue that did make me money.
Okay.
And so we literally just said, we don't want to do payroll tax returns anymore, except for a few people where it's kind of caveats and anomalies. And it's tremendously helped us. The client feels better. Their payroll tax is done better. Or it's just done more automated. We love Gusto, and then it plugs right into Xero, so it's now part of our tech stack. It's like if you're going to work with us, Xero for the accounting, Gusto for the payroll. Because then they start to offer all the tools and HR benefits, and it's great. And we're hiring an intern. They're going to get a welcome email on the first day, and then the email goes out to the team that tells us their favorite snacks. So we can have a Reese's cups on their desk when they come in. I'm just,
I'm looking forward to it.
No, well, you're not the intern. But you get my point. Data told us, let's make this decision.
Yeah.
It's a very small example, but you get my point.
Right. But yeah, well, I'll let that end it, man.
Yeah.
We're right at time, and that was a good way to end it.
Right.
So next week we'll be talking about the last stage of the total control accounting system. So definitely stay tuned for that.
Right.
Next week. Every Monday we go live. So like and subscribe.
Well, not really live. They're recorded.
Can you like a podcast? I just went YouTube there. Like and subscribe.
Like and subscribe. The only thing you didn't do was click the link button.
That's right.
You hit the subscribe button below.
Right.
My 9-year-old.
Yeah,
got that one.
the notification bell.
That's right. That's right.
All right. Well, that's it.
See you next time.